Our next guest says what remains unclear is the uncertainty surrounding the elections and the policies that could be implemented over the next few years. For more, let's bring in David Smith, CIO at Rockland Trust Investment Management Group. David, welcome. Good to have you with us. What we don't know is who's going to win the presidential election, and we don't know who's going to control the House and the Senate, which would, if it's not a clean sweep, it would really hamstring whoever is the occupant of the White House, wouldn't it?
Absolutely, without a doubt. And as you can imagine, here at Rockland Trust, we have clients of all political persuasions. And in this election, it's different than in previous elections in the sense that they're more concerned about the candidate that they don't like getting into office as opposed to the candidate that they do like getting in. And so as we talk to clients about the outlook, we reinforce that very idea, Tyler, that at the end of the day, the president can only do so much on a standalone basis. They need the support of the House and the Senate to really implement broad policy changes.
Well, so when you're talking broad policy changes, you're really talking about taxing and spending programs, correct?
Yep.
But there's obviously a lot that a president can do through executive action and in reducing or imposing regulatory actions through the agencies of government, right?
Correct. Yeah. So there's clearly some things that the president can do on a standalone basis, but to really have a broad effect on the overall economy and, fiscal policy particularly, they need the support of both the House and the Senate. And that gives us a lack of clarity at the moment, because as much as the presidential outcome is unclear, so is the outcome for the House and the Senate. So as we sit here today, roughly less than a couple of weeks away, I guess just a little over a couple of weeks away from Election Day, we don't have clarity on any of that. And so it's one of the major outlooks that we are blurred by at the moment. And the good news is we'll know in short order. And once we know who's in, we'll have a better sense of what kind of policies might get implemented.
I guess there are two things about which maybe you do have more clarity. One would be the path of interest rates, which looks like it's going to be heading lower. The other is the course of the economy, or let me put it this way, of corporate profits, which look like they are going to be moving higher.
Correct. So the Fed has made it perfectly clear the trend is down for interest rates. The exact path remains unclear. In other words, we're going to get 25, or is there going to be another 50 basis point move at some point along the way? But the pathway is clear. Its trend is down, and we know that over time that's beneficial to the economy. So that's very good. And the economy itself is in great shape at the moment. The soft landing is a really challenging thing for the Fed to manage to. And I give them an A+ on getting to the end result. There were some bumps along the way, certainly in getting here, but as we sit here today, a soft or no landing environment seems a very likely outcome, which is a remarkably difficult thing for them to do, to manage to.
And just to go back to the election uncertainty, David, I mean, as David Tepper said on our air, it looks like gridlock is the most likely outcome, that it's just going to be, close enough as to not really allow for any major moves one direction or the other.
And gridlock is good. I mean, at the end of the day,
Exactly.
investors are discounting future cash flows. And when you think about the cash flows, if gridlock happens, you have a pretty good sense of what the environment's going to be like, and you have a pretty good sense of the trend in rates. And so you can do your discounted cash flow analysis and come up with some pretty clear projections. So gridlock wouldn't be the end of the world. It would make some people unhappy, I'm sure, politically. But I think at the end of the day, from an investor's perspective, gridlock is not a bad thing.
Give us a couple of names that are going to help us make some money over the next couple of years.
Yeah, so one of the things we've been talking about a lot is the broadening out in the stock market, which is really good news. I mean, tech in the last couple of weeks has been the leader, particularly in the semiconductor side. But in the last quarter or so, we have seen a broadening, which is great. And as we look forward, we think the soft landing will be a good backdrop for continued broadening and good results from the broader sectors in the economy. And that's great news. So right now, one of the things we really like is Honeywell, an industrial name that we feel has got great end markets, that's got a lot of potential behind it with a multiple expansion opportunity. It's trading at a deep discount relative to where it has traded historically, relative to the industrial sector. So we think there's multiple expansion and a double-digit earnings clip for that company. Sort of counterintuitive based on the recent weather. We actually like Chubb a great deal right here. I know a lot of people are concerned probably and thinking about investing in a property casualty insurance company, given the major storms we saw down in Florida in the last few weeks. But at the end of the day, the great thing about the property casualty insurance business model is that they get the benefit of repricing their insurance every year. So we can see already a hard market for property casualty pricing. And our expectation is that the recent trend in the storms is only going to extend that hard market. And that's good for earnings ultimately for these companies.